And it's time for another edition of Patterncast Market Talk. And we're going to do a little diversion today. Instead of talking about futures, commodities, and all that stuff, we're going to go to an alternative universe called Bitcoin. And the reason why we're talking about it is that Bitcoin over the past 3 days, maybe over the past week or so, has been on fire. And I didn't expect it, but this person did.
No, hold on. Hold on. I like to take credit for stuff, but all I can take credit for is telling people not to short it. Now, I did buy Bitcoin at $31.50. That is true. Mm-hmm. But my commentary over the last 6 months was that there would be a move like this that you could short into. And actually, this is my first public comment on Bitcoin since February or something. I don't know. I did a conversation about this in our live trading room today, that like the Supreme Court says you can't really define obscenity, but you know it when you see it.
Right.
Well, I know, or I knew what was a good buying opportunity, but knowing where the top is always impossible. But you can kind of tell that it's probably a time to start thinking about it. And I think 7,800 to 9,800, that range, you're going to have those opportunities. I think you're going to have people, all the Bitcoin bulls will be back out. You'll get analysts moving targets higher. You'll get stories of, Bitcoin is solving, all the world's problems and curing cancer, and all that happens again. And that's probably a good time to take some off the table.
Yeah, and right now, though, it looks like it's in one of those exponential moves, and there's no telling where it's going to stop. And there's definitely some, what they might call irrational exuberance. It's really moving up. I guess is that a Milton Friedman term?
No, that was, what's his name? Alan Greenspan.
Oh, yes, Alan Greenspan. Now, you said you didn't pick the top, but no. And I didn't actually pick the top. However, I picked the day of the top.
Did you?
Yes, back in December 17th.
Wait, hold on. Wait, back up. I need to be clear. I'm saying on this move, I liked Bitcoin to move higher, but knowing whether this is the top now, that's what I'm saying. Yeah.
No, I was taking credit for the previous top of the previous bubble at around 20,000. And I had said that this was all futures driven, the hype around futures. And The day that the futures for Bitcoin were introduced was the day that the top happened.
See, you and I are different in one respect. I just don't feel comfortable knowing the moment of tops and bottoms. I don't feel comfortable calling dates and times and all that, because I think you can know the season, but I don't trust any of the people behind the scenes, and I know they've got more information and more money than I have. So I just kind of know the direction the wind is blowing.
Well, I built it off of a series of logical moves, things that happen in terms of announcements from the CME and then the reaction of the bigger market from that, and the buildup to that day and how it was going right into December 17th when they were going to, and it was the exact day that they introduced the futures that marked the top of that market. And, there was a fair amount of hype. I think most people thought that futures meant that Bitcoin was going to be opened up to the institutional market, which in a sense was true. But that institutional market wasn't looking to use futures, or maybe people that were into Bitcoin misunderstood the use of futures. They didn't realize that people are using futures to hedge the cash position, which essentially means they go short on the futures. But that's exactly what they did. And as soon as futures came out, they shorted the hell out of it.
Well, and I think that's the main thing I would take away from those futures contracts, is that if you thought that meant Wall Street was just sitting on the sidelines looking for a chance to go long Bitcoin, you were nuts. Wall Street was behind that. Wall Street was behind the move. They were behind the hype. They own the media. They own the banks. They own the money flow. They own the Federal Reserve, or the Federal Reserve owns them, or whatever. It's a weird incestuous relationship. The idea that they were waiting for December 17th to come out and go long is preposterous. That was a great time to look back, or to look ahead and say, we've been hearing about the story for the last 17,000 points on Bitcoin. I wonder. Imagine Lloyd Blankfein and Jamie Dimon sitting in a room going, all right, guys, are futures ready? We want to go long.
We're going to press the buy button.
Are futures contracts ready on my, I got my TradeStation platform open. No, they were very happy to just crush people in their long positions by going short. So
that's right.
And actually, the futures contracts with Bitcoin, now you know more about this than me, but are they connected to Bitcoin, or are they just trading? Like, if you short a Bitcoin,
well, it's a cash delivered product. So in the true sense, it's not necessarily connected to Bitcoin in as much as any other futures product that is cash delivered. But that doesn't mean that there isn't a connection. the two actually have a direct connection, and they can affect one another.
Okay, so there is. So you're saying there is an effect relationship, their cause-effect relationship.
Oh, yeah. As a matter of fact, there's been a lot of studies done on this about the difference between a product-delivered or a commodity-delivered futures contract versus a cash-delivered. Some people suspecting that because it doesn't deliver the actual product that there's no real tie. And what they found in studies, because, the indexes, for instance, are cash delivered, as are some other products. And what they found was that the cash delivered products actually have as much and sometimes even more influence on the underlying commodity.
I need to have you pause for a moment, and I don't like to chastise you publicly like this, but how dare you use the term cash when you mean worthless fiat?
Yes, that's what I meant. Worthless fiat.
Bankster-controlled worthless fiat. So then with Bitcoin, the futures products were levered, and they were levered with, quote, cash, and they were levered cash deliverable products on a total non-existent vaporware construct.
That is correct.
Which, by the way, there's no regulation on at all whatsoever. And these very people who delivered those as futures products could also be the ones pushing prices up or down.
That is also correct. Them, along with another group that people term as whales, those are people who hold a very large position in Bitcoin, as well as miners. They're the people that keep the whole network going by running algorithms that enact the transactions. And they use the futures products also to hedge their position as well, because they get paid in Bitcoin, so they need to hedge that in the event that Bitcoin price comes down. Otherwise, they wouldn't be able to maintain a steady business, especially in this long downturn that they had.
It seems like the riskiest of all ideas would be to play a Bitcoin future. It would seem like you would be a gambler of the highest order to buy or sell those and hold them for very long, right?
And yes, and there is, and that is reflected directly in the CME's assignment of margin and leverage to the Bitcoin contract. It is one of the most poorly levered futures contracts in the market. It only carries about 2.25 to 2.5 times leverage, where most futures contracts carry anywhere from 20 to 50 times leverage. And that amount of leverage is directly proportional to the overall volatility that the CME sort of assigns to the underlying product.
So why add that leverage to Bitcoin? Why not TradeStation or other outfits allow you just to buy and sell cryptocurrencies through their platform? I don't understand why the need exists to make it a levered Wall Street product.
The biggest reason is who owns it. So if it's in a fund, for instance, who owns it? If you have you can't really own a portion of it unless you control the keys directly to the product itself. But if it's a fund that owns it, you don't really own it.
Right. No, I understand that. But what difference does that make? Like, to me, I'm just some knucklehead, and I say, hey, I want to buy me some Bitcoin. If I do that, why can't I just load up TradeStation and buy Bitcoin? Why am I forced to use a levered product? I mean, I've just never understood why these bigger outfits don't allow Bitcoin trading directly.
The biggest reason is that, like you had mentioned before, there is no regulation. None of the exchanges are regulated by the SEC or any other recognized authority, right. And they have no interest in doing it because.
So wait. So now you're telling me that they're offering futures products on unregulated. I mean, think about this. No one even knows where Bitcoin came from. I mean, CIA. No one has any idea where Bitcoin came from. I mean, JP Morgan. No one knows where Bitcoin came from. I mean, the KGB. No one has any idea, so that it's astonishing to me that mainstream Wall Street with a straight face is allowing people to trade anything that's a levered product on that. It's just, go back a decade. Think about this. There are people who are, no joke now, buying and selling in open on Wall Street something which some guy named Satoshi Nakamoto, wink, wink, created in his basement, right?
Who may or may not exist.
Doesn't that strike you as disconcerting in some way? Just consider that for a moment. Just think about what's actually happening here. It's the only product I can think of where people are buying and selling something where they don't even know where it came from.
Yeah, and we really have no understanding. Because of this malaise and volatility and uncertainty, there was another major league outfit that had futures products, the CBOE, the Chicago Board of Exchange. They also had a Bitcoin futures product, but they went out of business a couple of months ago.
The CBOE did, or that Bitcoin futures product?
That futures product.
Yeah,
that was 1-to-1. The CBOE was the 1-to-1, and the CME is the 5-to-1. So 5 Bitcoins per one
I got
contract.
you. So the one that was 1-to-1 went out of business. I wonder why that would be. Why would that be the one that would go out of business?
Well, I think it wasn't as widely traded. First of all, the underlying pricing was a little more suspect because it was controlled, or the reference price was controlled by Gemini, and Gemini is owned by the Winklevoss twins.
Yes.
Well, I don't know all the details of why, but that really smacks of some suspicion there.
But doesn't it just seems, I mean, nobody knows where it came from. And anyone that says they do is either, first of all, if you knew where Bitcoin came from, you think a price would be on your head, because not supposedly, the Satoshi Nakamoto wallet's got 900,000 Bitcoins or something crazy like that.
Yeah, and I think they're talking about releasing them slowly.
So no one knows where it came from. And yet people are willingly throwing money at something that has no origin that anyone can track down, no regulation, and that we know can be moved up or down with tiny fractions of money. I mean worthless fiat, by bankers or people with server farms in North Korea. And that's something that we're taking seriously as a money-making venture.
Well, it's hard to imagine that it would ever serve as a currency because it's just too unstable. Also, consider the fact that 93 to 94% of all the value of Bitcoin is being held by under 4 or 5% of the wallets out there.
That's what I'm talking about, right? That's exactly my point. So how is that money for the little guy?
It's not. We're all sort of scrambling around for scraps, while there's going to be potentially some trillionaires out there.
The bottom line is, I liked Bitcoin to go higher. It did. I think Bitcoin between 78 and 98 is offering short opportunities. The closer to 98, the more I'm looking to push in some chips. And outside of that, I think Bitcoin is a dumb idea. It's not money. It's not money for the little guy. And if they'd have come out with this, and if Jamie Dimon had come out and said, "Hey gang, I've got something called the Diamond Dollar. You want to get in?" This would have gone nowhere. The folks that brought this out, the bankers who created Bitcoin, literally went to the one group of people they knew would adopt it, World of Warcraft players.
Yes.
And when you realize that Mt. Gox was Magic the Gathering online exchange, then you know all you need to know.
Yeah, dubious beginnings. There's still people out there thinking that there's going to be institutional involvement. In fact, Fidelity, they have a service that is supposed to be a holding place designed specifically for institutional investors. But I still don't believe that there are in any major way any institutional investors involved in Bitcoin. And that's because of the same reason why the SEC will never, or at least not in the foreseeable future, approve any kind of ETF based on Bitcoin, because the FBI and the SEC are still chasing down hundreds and hundreds and hundreds of cases of fraud.
All Bitcoin is a placeholder for the Goldman Sachs coin, the JP Morgan coin, the Wells Fargo coin. And when people are able to trade a cryptocurrency that's directly tied to mortgage-backed securities, look out, a Roman candle will be lit under those things. Mm-hmm. So I think that Bitcoins will always be kind of the standard, and people look at it, but
there'll always be a use for it.
Yes, but I definitely believe that Wall Street's got much bigger plans for cryptocurrency besides Bitcoin. Bitcoin was the test case. Jamie Dimon, Lloyd Blankfein, and Blythe Masters. So Blythe Masters is involved in Bitcoin. Jamie Dimon's in it. All these bankers are in it. You know that this is just the first wave of cryptocurrency. That's all I'm saying.
I agree.